Okay, looks like we got a few people on. Somebody can throw me a thumbs up, make sure the audio's clear. We'll get going. Let me bring up. I don't have Rocket Chat installed. I don't currently. Oh. All right, thank you, Crypto Historian. All right, looks like Brian's getting a start with you guys and providing some answers here. Let's, as usual, we'll walk through the slide deck, then we'll move on to the quiz, and then we'll go into the Q&A document, and hopefully we'll have plenty of time to go through the trading log. I know people have been wanting to get some more feedback there, and unfortunately our timing has not been the best. We've had some longer sessions, but with any luck, we'll get through at least this last week's charts here. All right. Welcome to week 8 of the Rational Investor School for Trader Development. This week we're talking about volume analysis. As I said before, and we've said many times, and you'll hear many more times, we always want at least 3 reasons for a trade. We want this to be from relatively independent analyses. So generally speaking, we look at location, then we look at momentum, and then we look at price structure. We've talked about price structure. That's what we're talking about, M's and W's, candlestick reversal patterns, that sort of thing. We've talked about location. That's Fibonacci's, retracement and reload zones. And so now we're getting into some of the different momentum indicators. This first one that we're talking about here, OBV, is specifically a volume-based study. In a very real sense, that can be considered a separate reason from other price-based momentum studies. So, so there are setups like the DAVO where the reasons you're looking for are price structure in OBV and in if I remember right, it's OBV and Willy, which we'll get into in just a little bit. So, without further ado, let's dig on in. I'm going to be popping back and forth. I don't have my second screen. It just went on the fritz on me, which is why I'm a little late. So just me popping back and forth in chat just to make sure I'm not missing anything. All right. So we're going to define the on-balance volume. There are 4 elements to this volume study. Okay. Then we're going to talk a bit about divergence and how we use OBV. So OBV stands for on-balance volume. It's a method used in technical analysis to detect momentum in volume. The calculation relates volume to price change. So it looks at whether the day's volume or the period's volume, because you might be looking at a 15-minute chart or a 30-minute chart, but it looks at whether the period's volume was bullish or bearish, and it is some calculation based on that. It was developed by Joe Granville originally. It attempts to detect whether money's coming into or going out of a particular asset, whether it's being accumulated by a large number of buyers or sold by a large number of sellers. And traders will use an upward sloping OBV to confirm an uptrend and downward sloping OBV to confirm a downtrend. And of course, we start to get into divergence here. If you find a downward sloping OBV while the price of an asset is trending upward, it can suggest that the smart traders are starting to exit their position, that money's starting to come out of the asset, and can predict a reversal in price movement. So, let me, I guess, first go to, I'm going to step off of this for a second. I'm going to show you how we put this on our chart. Okay, so let me remove it here. So your default chart's going to have, let me get rid of RSI as well. Your default chart's just going to have volume and price. I have the fractal indicator on here from previously when we talked about it. One of the questions that came up in the Q&A document was what the chunky bars were. For that, we're talking about volume, right? So we've got a couple of different indicators that can be used here. We provide you a link in the, where's that? I guess I have to go back to the class itself. In the beginning of the class itself, we provide a link to the OBV script here, right? That'll take you to this page. If you come down and you add that to your favorites, then it will be available in your favorites list on your charts. So then we go to indicators, go to favorites. That was On Balance Volume by Stumer. All right. And what I like to do is I will then take the volume study and I will move it down into that lower frame. So I go to, and this may look a little different if you have a free account, but it's basically the same. You're going to click on the drop down and you want to move to existing pane below. Okay. Now once down here, what I like to do is I take this and I go into the settings, and under inputs it is, precision here. Oh no, it's right there. I'll change the opacity here to make them a little darker, right? Just so we can see them a little better. I guess we're going to go lighter, since what we're talking about is on a dark chart. If you're on a light chart, if you're on like a white background, you're going to want to go darker. Okay, let me do the same here, just so I can see them a little better. Hopefully that's clear to you guys. And then last but not least, so we have this pin to scale. And what I like is what we have here, which is no scale. You can pin it to the right scale. And then what it's going to do is show you a separate section over here. Or you can pin it to scale A, which is this default one, but that tends to make it very hard to read, right? You see it's all just compressed up here. So what I like to do is just pin it to no scale at all. We don't really need to see the number values. No scale. We don't really need to see the number values for the volume. We can always mouse over a given bar and see the volume values for that bar. So as you can see, the numbers here change as we mouse over. That shows you the bearish and bullish volume, respectively. Okay. All right. So this is how I have my study. We may also want to change the OBV to make this a little easier to see for this display. So let's make this bolder. It's my EMA line. I like to have my EMAs in red. That's just me. And then I like to have this signal in orange, but you can have it in whatever colors you like, right? And that's just for all my studies. I try to do my signal line in orange and my EMAs in red. That's just so that I can, at a glance, identify them. You can do it whatever colors you like. Whatever makes sense to you is what we want you to do. All right, cool. Rational Dave says he has a free account. So far, everything seems to work the same way. Perfect. Okay, let's go back over here. All right, so there's 4 key components, right? We have the OBV line in this study, and you can easily differentiate the EMA from the signal line in that the EMA is always a smoother move because it's a moving average of the signal line, which is going to have more sharp corners, right? So the OBV line is the blue line in this study. The EMA line is the red line in this study. And then we have volume confirmation. We're talking about the big chunky bars. This is the volume bars. Okay. And last but not least, we look for market structure within the study. So we're looking for M's and W's, triangle breakouts, heads and shoulders. Obviously, candlestick pattern reversals aren't a thing because we're not looking at this in candlesticks. But any of the other market reversal patterns will give us good information. Generally speaking, it's relatively simple, but we do have 2 points of confirmation. What we want to see is market structure that crosses the EMA, right? Because keep in mind, the EMA is a trailing signal of what has happened in the history. So we want to see a reversal. We want to see a cross of that EMA with our market structure. And then we also want to see, and this is the part that gets confusing for people, we want to see volume impetus. Okay. Now there is I don't know if this is going to make it easier or harder for you guys, but there is another indicator which our site veteran Benjamin wrote for the VIMP, which draws a green line along the bullish volume bars and a red line along the bearish volume bars. We can use that in place of volume if we like. Here, let me give you a link to that. Oh, EMA is the moving average. It's the oh, hold on, my brain's having a fart moment. We have a simple moving average, and we have the why am I not remembering the term? God, I use this all the time. It's a well, here, let's just look it up. There you go. Why? An exponential moving average. Sorry about that, guys. It stands for exponential moving average. Now, this isn't a moving average of the price. This is an exponential moving average of the OBV signal itself. Okay, so it shows the moving average of this orange signal, in my case, itself. Blue on the example that's in here. Right, so it's a moving average of this, and that's where we get to see, we use that for validation of a reversal, because if we see this market structure crossing the EMA, we know we're crossing back across our historical movement, right? Because that moving average shows us our historical movement. I don't know why I brain farted on exponential, but yeah, let me give you the link here. So we have the VIMP. So if we go into this VIMP and we add this to our favorites, we can then add this study, and then we'll move it up on top of where the volume is. So I'm going to get rid of volume so you can see the VIMP. We're going to go here, favorites, volume, impetus. And you can see it's still showing us the volume bars, but what it does for us is it draws these lines, which can sometimes make seeing the highs and lows a little easier. Some people can get a little confused, and I'll show you the thing that is the most confusing as soon as I move it up to the existing pane. There's a setting in here under inputs for this, and what this does, I don't recommend it at first. It inverts the bearish bars, so the bullish are all above and the bearish are all below. But the problem with that is it also inverts your signals. So in what would normally be lower highs shows up as higher lows in the bearish indication, and that just gets confusing. So make sure you don't have this checked, that it's all showing up in one vertical, and I think you will probably not have too much problem with it. This is also just by default, it's a pretty bright color, so it's pretty easy to see everything. Okay, so if you did just volume, it would look like this. When you have the study, it adds these lines. Okay. All right. So I'm going to leave it without the lines for right now, just so I can illustrate some things. Yeah, Tony, kind of like a trend line. It gets really confusing for people when they're looking for correlation between, more importantly, for divergence between price and momentum. Okay, so what we want is we want to see price structure, or sorry, we want to see market structure in OBV. So that's our signal line, the orange line here for me. We want to see that crossing the EMA, which is the red line, okay? And then the last piece of confirmation we want is this concept of volume impetus. What we're looking for here is, where is it? There we go. we want to see 3 successively lower highs in whatever camp we're reversing out of. So in this case, like if we were moving down here, and well, that's not a good W. Let me find a decent piece of market structure here, and then I'll show you how we use it. All right. Okay, so right here, it's a little wonky, but we've got an M there, as you can see. Okay. Come up, lower, up, but lower, and then break down below. Okay. Can you see how that M confirmed on this move down here? It would have been this candle that really confirmed it, right? Come on, we must move over. Right here. This candle would have confirmed that M. Or this bar. Actually, this is a volume bar down here. So what we then look for, we have an M. It's crossing the EMA. Okay, that red line. And then what we want is 3 successively lower bullish bars, because price has been moving up, right? And so what we're looking for is the bull camp to fall asleep. So what we can look for here is this bar, and then we don't want the bar right next to it. What we're looking for is kind of like when we're looking at price, and we look at like fractals or railroad tracks to give us an idea of a high or a low being established. That's kind of what we're looking for, right? So high here, we have a little bit of a break here. We come down, we come up. I would say this would count as another high here, right? Because we came down and we came back up, made another high, came down, came back up. I wouldn't really call this as being confirmed, right? Because we did have this lower low here, or this lower high here, but that was, I don't know if I would count that as having come up, right? I might need to call this a new high, which invalidates this one. This one would then bring it up again, and it wouldn't be until here, really, that I would call that confirmed as divergence. Or, sorry, as volume impetus. Wow, my mouth is all crazy today. Does that make sense, guys? How we came down here. We don't want to see just boom, boom, boom. We want to see retests of higher volume, but progressively lower volume. All right. Anybody have any questions on that? I mean, that's the part that confuses people the most in here. And I'm apparently having speaking issues today, so please, if it's unclear, call it out so that I can provide some more explanation, right? So we're not looking at like right next to each other bars. That would just be a down move. We want to see it move back up, but then fail. Move back up, not as high, but fail. And this is all on bullish volume only, right? So, and you can do this on your volume bars as well. You can make your one color basically transparent. What we can do is we go here like that, turn the opacity all the way down, and then all we can see are the green bars, right? That can sometimes help, right? And then, of course, the whole point of the study that Benjamin wrote is that we get some lines in here, and that can give us an indication. So we had a peak. You can kind of see the peak here, but then we had a higher peak, higher peak, higher peak. So that was there. And then lower peak. Now, that makes it a little even better, right? You can see, like, if you do the lines, how this makes it even better, kind of lower high. So CJ, what we're looking for here ultimately is we're trying to see what volume's giving us indication of is how much orders are coming in from each camp, right? So each volume bar tells us what the volume of orders that came in is, and then each the color of it is determined by which side had the most orders. So we know that a bulk of orders came in here, most of them were bullish. A bulk of orders came in here, most of them were bearish, right? And what we're looking for is we can see that one camp's in control as price is moving up, right? And what we're looking for is that camp. So price is moving up, so the bulls are pushing price up. And we want to see the bulls fall asleep before we get into a trade, right? So what we're trying to get an indication of is, at what point can we say the bulls have finally gone to sleep? We need to see them trying, but less forcefully, trying less forcefully, trying less forcefully, right? Ideally, we will also see the bears waking up, the bearish bars getting higher and higher, but sometimes that doesn't happen until the actual reversal move. Brian also gave us a linked one. Let me open that up here so everyone can see it in all its glory. So we can see, so what Brian's done is he's made the bearish volume not visible, so all we can see is the bullish volume, right? And we saw price coming up, and we can see one high, we see a lower high here, because that one was higher than this one, right? So it invalidated this lower high. And then we have the lower high here. Once we get to this point, we can kind of say, okay, it looks like the bulls are exhausted. Until we see a higher bullish volume, these bulls are basically asleep, right? Now we can get into situations where both camps are asleep, but what we really care about is the camp that made the previous move up, or down, right? Whichever direction the price had been moving. That camp, we want that camp to fall asleep for us to get a reversal. Does that make more sense, TJ? Oh, right on. So Alex pointing out that the VIMP really speeds up his impetus study, and so he really enjoys having the lines there, right? Um, Empire asks, is there any way to bring up the VIMP studied Coinigy? That's a lot more difficult because Coinigy isn't piped through TradingView proper. It's using the free API, and so there's not really a way to do the VIMP script in there. All right, so Brian says, let's do this manually, see if we can see what's going on. All right, so what we're looking at here, let me kill these lines so we can see the raw volume here. All right, and I'm going to expand the volume study up here. So to do this manually, and I would just use the polyline tool. I think that's going to be the easiest way to do it, right? And let me, again, what we care about right now is the bullish volume, because we had previously had this move up. Okay, so what I've done is I've made the bearish volume transparent, so all we see is the bullish volume. Okay, and can you see how we had a peak here? Okay, then we came down. We're looking for another peak. We want to see a lower peak, but we're looking for another peak. So it peaks again here, coming down. Okay, low here. Then we peaked here, but we peaked higher than that previous one. So now we have two lower highs. One high here, one high here. Okay, and then we come down. We peaked higher again. Uh-oh, we're back to two lower highs. This one and this one. Okay, we come down here, come up here. Now we've got three lower highs, right? We had put a high in here, then we put a high, then we put higher, 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 put a high in here, then we have a lower high here, right? Does that make a little more sense? Hopefully. This is a hard concept to grasp, so please ask questions, okay? Yeah. As Brian says, he's talking to to respond to Tony, but it's a good analysis. Think of these as IMs that we're looking for. Okay, we want lower highs, which doesn't mean just straight line down. We want to see test, test lower, right? CJ, does that make more sense? Okay. Like I said, this is kind of a hard concept for people to get. Um, so don't feel badly if it doesn't make sense to you. Like that's pretty normal, right? Um, so if you have questions about it, don't, or if it's still not clear, let me know so we can try to um, show you in a different way. Okay. Yeah, and as Brian says, realistically, look at your OBV at the same time. They should mirror each other. And so that by that we mean the OBV signal itself, right? You can see as we're making these lows, we spiked here, here, lower high, right? Because again, what we're looking for with this is confirmation of structure that we see in the OBV itself. Okay. All right. So auto fit that scale. Okay. So those things all need to be present for a good volume signal. We need to have market structure in OBV. We need to have it crossing the EMA, and we need 3 successively lower highs on whatever camp we're moving against. So if this is an M, we want 3 lower highs on the bullish volume. If this were a W, I think we might have a W example in here. Here, okay. So if we have a W, then what we want is 3 lower highs when it comes to bearish volume, right? To give us an idea that we're about to see a reversal in the price itself. Now, this idea, also keep in mind the idea of divergence. Okay, we talked a little bit about this with RSI. We're going to talk about it more as we go through MACD and Willie. We look for this in basically all of our indicators. Okay, and what we're looking for is market structure to give us an idea of trend, right? So a market structure W gives us a bullish trend in OBV, while we have a bearish trend, we have lower lows in price, right? That's what we call divergence, and divergence is extremely powerful. When we get divergence, that gives us a really strong indicator that that we're likely to see a break in the other direction. Okay. Now, by itself, any one indicator is not going to count, but if we're in a good location, we're in a reload zone, and we see this market structure come in OBV, for instance, and we've got volume impetus that is confirming that, and it's crossing an EMA, and then as soon as we get market structure on price, that's a valid setup, right? We'll have location at that point, and momentum confirmation, and price structure. Okay. So David says, what does it mean to say OBV should confirm this volume impetus? It's actually the other way around. When we see movement in, and let me see if Brian's answering that in his. Yeah, it looks like Brian. When we see structure in OBV, right? What we then want to see, in order to confirm that, we look at a couple things. We won't see this on his chart because he didn't. This is just the raw OBV. There's no EMA, but we want to see it cross the EMA. That's one point of confirmation. And our second point of confirmation is when we have 3 lower highs on the camp that had previously been controlling the move. That gives us confirmation, our second confirmation of the OBV signal itself. Okay. So for a volume signal, and you'll see when I do a chart and I do a write-up on that chart, I don't refer to that as the OBV study. I refer to it as a volume study, and that's because for that volume study, I want both an OBV signal and I want that confirmed by EMA and by volume impetus. Okay. All right. Now, it is important to note for divergences. When we see a divergence, we need that to be a confirmed divergence. And what we mean by confirmed divergence is, so in the case of this is a bullish divergence in OBV, which means we had lower lows in price and higher lows in our indicator, and that gets confirmed when this W is confirmed. So when this W line, when that closes above the midline for the W, that W is confirmed. And at the point at which that's confirmed, we call this divergence confirmed divergence. Okay? Yeah, okay, David, let me reiterate that. For a good volume signal, okay, we need 4 things. I'm just going to type on here just so we have it, okay? First, we need market structure in OBV, if I can type. We need OBV crossing the EMA of OBV, okay, which is that other line that's in here. Then we need the volume impetus, which is the 3 lower highs. Okay, that gives us our volume indication, and ideally, and this is kind of, I guess I should put this as 1, right? 2, 3, 4. Divergence, lower highs in price and lower and sorry, I did that backwards. Lower lows in price and higher lows in OBV, or higher highs in price and lower highs in OBV. Okay, so divergence first is OBV moving in the other direction than prices. Then market structure was a little small. Let me blow this up. Then market structure in OBV, so that's an M or a W. We want to see the OBV crossing the EMA of the OBV. And then we want volume impetus, which is 3 lower highs in the camp that had previously been driving the market. That make sense, David? Let's reiterate it way back here. Actually, I don't know that so we call it 1, 2, 3, 4 like that. Okay, but that's what they are. So let me copy this. I'll paste it here, just so you have it. Okay, so like anything else, we want to see, this is just one signal, one of 3 that we need at least, okay? So we want to see this in conjunction with other things. If you had this momentum study, right? And in this case, he has 2 indicators together for his momentum analysis. He's using the Willy, MACD, and OBV, right? And we look for a good location. Then we just need to wait for some kind of market structure to get us in on market structure on the price itself to get us in. right? And these opportunities don't present themselves, well, all right, a lot of false opportunities present themselves when you just look at one indicator. But when you look at the three together, it really nails down the best opportunities to get in. When you have good location, you have good like divergence and structure on things like OBV, momentum studies, and then you have price structure itself. These three things together are what we want to trade on. Oh, wow, look at that. Go Bears, go. So, now, bear in mind, that's a 5-minute chart, right? So it just fired. That whole move's a couple $100, which weirdly in crypto is in Bitcoin in particular is kind of small, but I'm sure that will develop. So wait for that to get nice and big. And that's a good example there, right? We saw the bulls falling asleep, right? And sure enough, bears woke up. Boom. All right. So, as always, we always want to see three reasons. Our default set of reasons is location, momentum, and price structure. We now are at a point in class where we can begin on an actual setup, putting it together, because we have elements of each of these categories now that we've learned. I'll get into that in a minute, but before I do that, let me go through the quiz, and then we'll go through the Q&A document. Hopefully, I'm trying to go semi-speedy because I would like to have some time to go through the trades you posted. So, Q-Wiz, there we go. All right, what is TRI's preferred volume indicator? What does it measure? It's OBV. It measures the net in and outflow of money into or out of an asset. What is the term we use to validate a trend change in the OBV index? We're looking for market structure. And we called it the OBV index there. That is the name for the signal line, the OBV line. Okay, so on my study, that I changed that to orange, right? It's blue, I think, in the examples we have here. Okay, volume impetus is used to confirm what we are seeing in the OBV indicator. Because you will occasionally get M's or W's in the OBV indicator, and you look at volume impetus, and it's totally ass backwards. You're like, no, there's no way. That signal can't be valid because we're seeing more and more volume moving against it. Okay. All right. Aside from impetus, another tool we use to validate what we're seeing in the OBV indicator is the moving average of the OBV. Right. We want to see that. That gives us a good idea that it's moving against its previous trend. All right. To register a volume impetus reversal, we must see 3 lower highs by a particular camp. And that doesn't mean 3 successive lower bars. Again, it means 3 lower highs. And when considering volume impetus, what we're really asking is who is driving the bus, right? Who's in control, bulls or bears? And then should a volume impetus reversal occur, what does TRI use to describe that reversal? We refer to that as the camp falling asleep. All right, finding a bearish OBV divergence while the price of an asset is trending upwards can be used to suggest that smart traders are beginning to exit their position and therefore a shift in trend may be coming. That is true. And per the lecture, please select the key components of the OBV study. All right, so the OBV line itself, volume confirmation, market structure, and the 13 EMA of the OBV. Okay, these are the key components of the OBV study. You'll notice price momentum divergence is there, right? This is not what we are looking for. This is what we are looking at is volume momentum divergence. So that's going to that'll throw you off. You need to be clear that what you're looking at is a study of volume, not of price. All right. On balance volume is a very powerful analysis tool, and by itself can justify entering a trade based on a confirmed divergence between price action and volume. False. We know that's false immediately when we see by itself can justify. We always want at least 3 reasons for a trade. Any questions as we go through? Tony asks, in that 5-minute chart, the bears roared before the bulls officially confirmed themselves falling asleep, but clear to see 3 higher lows. So if OBV is not in sync with volume impetus is greater than OBV? No, I wouldn't say it's greater than OBV. It's simply that you want to have both before you have a confirmed volume indication, right? Before you have confirmed OBV action, you need both of those. You may not get these on every move. You may see moves that happen seemingly out of nowhere in regards to just to one indicator. So short answer, no, it's not that volume impetus is greater than OBV. It's that we want to see those 2 things in alignment. All right. Back to the quiz. When analyzing OBV and OBV moving average, what is critical for a strong signal validation, either bullish or bearish? We want to see structure in the OBV line with a moving average cross. And then, what is the easiest way to identify if an asset is in a bull or bearish trend? This is going to give you a quick snapshot at the moment in time, and that is if the OBV is either positive or negative. We didn't really talk about this, but you can see OBV has a range that is either positive or negative. It's not a oscillator, so that can be deeply negative or deeply positive. Right now, the OBV for BTC is pretty deeply negative still. Okay, so it's more of a snapshot, and it's not going to scale with your time frame. Okay. And then the OBV moving average is used in conjunction with the OBV line to confirm and validate price momentum. And this is false, and it's false because we are not looking at price momentum, we are looking at volume momentum. All right, and based on the lecture, when measuring volume impetus, either bullish or bear, what are we asking ourselves? We're asking ourselves, is there more participation or less participation in the market by that particular camp, right? And then a price momentum signal is more powerful than a volume momentum signal. That is false. If anything, I would say volume is slightly more powerful than price momentum, but only slightly. All right, the moving average of the OBV indicator can act as support resistance for the OBV itself. This is true. You don't really learn about moving averages deeply until level 2, but that's one of the things about moving averages is they act as support resistance for whatever you are creating an average from. All right, so there's the quiz. See if there's any questions while I was going through that. Oh yeah, so oscillators, to give you a quick example of an oscillator, excuse me, an oscillator is like the RSI, okay? The RSI has an upper boundary and a bottom boundary, all right? It goes between 0 and 100. The RSI will never be greater than 100 and never be less than 0, okay? Compare that with OBV. OBV is a raw volume. It's based on the raw volume, so it's not bounded by anything. It can go down to negative 999 million or whatever. It can go to positive 12 trillion. There's no boundary as far as that's concerned. And that's what I mean by an oscillator. We have a indicator called the Willy that we use when we're doing analysis that needs an oscillator, but we'll learn that in a little bit. All right. Q&A. All right. Tony, hopefully, I don't know if you're on or not, but hopefully I gave you enough information about how to set up your OBV indicator correctly in TV, how to do the scaling and pinning it to price. Can you clarify the difference between volume impetus and divergence? Sure. So divergence is a situation, this is like mantra, right? A divergence is a situation where you have either lower lows in price and higher lows in the indicator, or higher highs in price and lower highs in the indicator. That's divergence. Volume impetus has to do with participation in the market and gauging the participation of a particular camp, either bullish or bearish, on that particular asset. Okay. Should we be looking for M's and W's in the volume bars, OBV, or is the WM in either good enough? We want to be looking for the M's and W's in the OBV signal itself. It can be said that 3 lower highs is kind of like looking for an M with an extra shoulder when it comes to volume impetus. Might be a good way of thinking about it, but we only ever look for an M in that case. And EMA is we're just looking for a cross of EMA. Is there a volume impetus indicator? Yep. And I think that's the link to it right there, right? That's the VEMP. Yep. Perfect. All right, maybe I messed up the OBV. EMA isn't discussed much in the lecture video. Seems it's mentioned as to, and whether ends as a positive whenever you breaks vote, so it's only used. The EMA gives us an idea of the historical direction of whatever we are putting that EMA on. So in this case, we're looking at the historical direction of OBV. When we see a cross of that moving average, we are seeing a move against that previous trend, right? So what we're looking for is a cross, either moving down across it or up across it, of the OBV across that EMA. All right, I think I clarified this already. This was number 6. A bit confused on how to identify the second and third volume bar. Can bars be side by side? So no, we want to not successively lower bars, but we want to see price. We want to see volume come down and then come back up to a lower high, down, and then up to a lower high in that particular camp. All right, at 29.10, Brandon puts number 3 behind 1 lower high. Any purpose in skipping it, or was it a mistake? So the problem is this here, where you have the arrow drawn to, that was the 3rd lower high until this came in. Then this one came in, that became the new 3rd lowest high. If it had gone up here, it would have been the new 2nd lowest high. Hopefully that makes sense. All right. And let me see if there's questions. Oh yeah, Tony, no worries, man. No worries, man. These are all good questions because people are there are people that aren't in the live chat right now, and they might not understand what's going on. So please, guys, always ask your questions. It doesn't reflect on you. It just is. If you're asking it, somebody else is asking it too, right? For sure. So no, all good stuff, man. All right. All right, I think I went over this. Those chunky bars are the volume bars. You can either get them by just moving the volume indicator down, the built-in volume indicator, or by using Benjamin's VEMP script, which will draw the bars as well. All right, 13 EMA. We talked about that. That is the moving average of the OBV signal itself. Right. All right. If indicators like OBV are making higher highs while price is making lower highs, can we still call it a divergence and expect to be bullish? No. So we look for very specific things when we're looking for divergence. So again, we're looking for when we are measuring for a bullish divergence, what we care about are, well, we don't have one right here, but we have one right here, okay? We care about lower lows in price, and we want to see higher lows in the indicator, okay? When we are looking at bearish divergence, we are looking for lower highs in price, or sorry, we're looking for higher highs in price for the divergence and lower highs in the indicator. I think of it as pressure, right? So we had been coming up here, and then the divergence we'll see in the indicator shows pressure coming down against that move. So we were coming up, and we're starting to see pressure down that's going to push price down. Similarly, price had been moving down. We're starting to see pressure that's going to push price up. All right, that's how I think about it. I don't know if that helps or not. Yeah, man, keep the questions coming. Questions are good. I want you guys to have as good as possible an understanding of all of these concepts by the time we get out of level 1. Okay? And please bear in mind, for most people, when they finish level 1, they're still going to be putting it together, right? We want you to be as complete as possible, but for the most part, most people, when they finish level 1, they've gotten all these new concepts and they understand intellectually how they fit together, but it's going to take practice trading to really put those pieces really firmly together, right? So it will come together, but it does require that you practice it. Practice. That's why I like these sample charts and why I want to get to those. Okay, the trades people have posted here. This is really huge. Okay, where was I? Okay, how to tell the difference between volume, impetus, bear, and bull. Sometimes they're going at it the same. It's true. So sometimes we will see both camps fall asleep at the same time. Sometimes we will see both camps wake up at the same time. What we're looking for is the times when that's not the case, right? But that will happen on occasion. What we really care about is the camp that was controlling, like the bearish camp here, falling asleep, or the bullish camp here falling asleep. That is more important than the other end, because usually when it wakes up is once the price is already moving, right? Once the other camp wakes up. So what we really care about is the camp that was in control of it. We care about them falling asleep. How do bears take control or influence the market? Shorting, selling their positions. I mean, bear in mind, some people, there are traders who will ultimately want to be long in something, but while they're short, they're selling their position, right? But we do see shorting happen in futures, in forwards contracts, and options. Yeah. Margin positions let people get short. That's what we're talking about, like forwards contracts. Is it possible for no one to take control of the market? Yeah. Both sides can fall asleep, and then we're just waiting to see who wakes up first, right? Who takes control. And that's where we look at other indications like location and things like that, right, to give us an idea of who is likely to wake up first. OBV going positive or negative, so that's indicated over here. Let me see if I can find another asset where we might see positive or negative better. I think this could be deeply positive, so yeah. So you see this value over here. This is my OBV value. The problem is both these markets I'm looking at are either deeply positive or deeply negative. VIX isn't going to give us that because it's not. Gold's pretty deeply. And I'll be honest, most of the time because of that, because it doesn't scale with time frame, it's just the raw volume level, I don't make use of the positive and negative aspect very frequently. Oh, dang it. Sorry, Tony, I didn't mean to skip your question. Ah, okay, yeah, that's a good one. How far back in a specific time frame should we go back to locate volume bar highs? To previous volume bars expire. Um, I wouldn't say that they expire. What I do when I look is I count backwards. So I go to wherever the current bar is, and I go backwards. I go, okay, so is there a high? Okay, that was a lower high. That was a lower high. And what I'm looking for is going back. And again, I'm looking at this from a particular perspective, right? So what would have triggered me would have been like this potential W, really V bottom W, in OBV, right? So then what do I care about? I care have the bears fallen asleep. Well, if I go back here, I can see no, the bears have been waking up. I can go back like 3 peaks, and I can see the last 3 major peaks. It's been getting higher and higher, right? So that's what I tend to do. I start at the current and I work my way backwards, like 3 bars. Not 3 bars, but 3 peaks. And you can see I just automatically went, okay, peak, that was really low. Okay, then we had another higher one here, so I'm going to discount these and go to here and then to here, right? Hopefully that makes sense. Yeah. As Brian says, we had that question about whether everything can be asleep. He says, as you can see here, it kind of looks on there's a 4-hour chart, like in Ethereum, everybody's asleep right now. So the question is, who's going to wake up first, right? Okay. Did that answer your question, Tony? Let me know if it didn't, and I'll come back to it. Randomly signing me out, thanks. Hold on, I gotta get back to where we were. Alright, talked about shorting. Is it possible for anyone to take control? Yep. OB going positive or negative, talked about that. How does the MA cross work exactly? Divergent signal. All we're talking about for a moving average cross is our signal, so in my case it's orange, crossing my OBV EMA, which is the red line. So when I cross, what I want is price structure that crosses the moving average. Okay. This M crosses above and then back below the moving average. That'd be a little mixed signal for me. Up here, here's a good example. We have this M. It was mostly above the moving average, then it crosses below the moving average. Okay. If that occurred at the same time we have bullish volume trailing off, falling asleep, right? That can be a powerful signal that we're going to get a reversal. And what did we get? Boom, boom, right? So we're just looking for a movement across that moving average. All right, cool. Does OBV measure the actual dollar amount of money coming into or out, or is it measure something else? Let's go take a look at. Oh shoot, what's the Investopedia.com OBV? We can see the literal calculation here. All right. So what OBV does is it looks at the previous OBV. If it was previously bullish, then it adds the volume if close is greater than close. So if our close now is above the close before, then we just use the volume. If the close is equal to the close before, then we zero it. And if the close is less than close before, we subtract the volume from it. So it's a raw volume amounts, but it's not like a given OBV. It does not represent the volume on that day. It represents a combination of the previous day's volume and the current day's volume if you're looking at a daily chart. Okay. So you can get more in the weeds with it here. I'll put this link in. All right. Course is coming in soon. I'm very worried I won't have enough time to put all this info together and be able to review. Yeah, week 12 we will review the whole course and answer any extant questions. Again, Tony, and not just for you but for everybody, I want to reiterate. Most people, I would say, there's a small percentage of people who will have been doing a lot of paper trading, really catching on, really going well with it, and they feel really confident and completely secure in everything we learned in level 1. That's not a majority of people. A majority of people are going to have mostly followed along. They get all of the concepts and they get them intellectually. Hopefully, I've described everything that they need. But then they're going to need to practice it for a bit for it really to sink into their bones, right? That's pretty typical. Hopefully, a very minuscule amount of people will have bits they don't understand, and you will have access to these weekly Q&A sessions indefinitely. I'm going to, at the end of the class, I'm going to make sure everybody that wants access has given me their YouTube email address, and then I'm going to set these all to private, but I will provide them with access to it, and those will be up until for some reason YouTube makes me take them down, and if that happens, I'll find some other place to host them. So you'll have access to review those for those people that have things they need to go back and review. Even like a majority of people will probably have a few things that they're like, okay, I need to take another look at that. And those will be available to you. So that's normal. There's a lot of information and a lot of change in how you do things that we're giving you here. Okay. Yep. And that's a very common worry too. People get there and they're like, "Oh man, am I the only one? Like, I don't like this feels like it's above me." It's not. It just takes a while to digest. It takes a while to really get it in. You got to practice the trades. A lot. I mean, we talk about this all the time. I'm a little bit OCD. I might be one of those people that like stacks my fries and according to size before I eat them. But the thing for me is when I'm like testing out a setup. Like I have a setup that I just recently built. It won't make sense to you guys because it uses some level 2 specific concepts with volume profile. But I have a setup I just built. I'm not going to consider that setup validated and ready for me to use real money with it until I have done at least 100 paper trades with it. Okay, so there are other ways of doing it. It doesn't have to be 100. That's what I like to do. Brian has a methodology he describes in the videos where he'll do like 20 paper trades and then he'll do 20 trades with a very tiny amount of capital, and then 20 trades with a little bit more capital before he feels comfortable with the setup, right? What's important is that you have a methodology around it, but I mention it mostly because it takes like 100 trades before you really feel comfortable with a setup and watching it flow, because it's not just about the raw setup data itself. It's about the emotional process you go through when you're watching that trade happen, because each setup's a little different about that. Some are very anxiety driven and some are really casual, right? So yeah. Anyway, I don't want to wax too rhapsodical about it, but guys, it's perfectly natural for you to feel like on the edge of overwhelmed, okay? Because there's a lot of stuff we're throwing at you. That's okay. Just keep practicing it, and it will become second nature to you over time. David, I mean, I don't really use TradingView for my paper trades. I track my paper trades in my trading journal. I'll walk you through that though. I'll show you how I do it. Oh, it looks like Tony knows how to do the paper trades in TradingView. We'll talk about that in just a minute. Hang on a second. Let me finish getting through the Q&A and then I'll come back to that. I don't like that I keep getting signed out of stuff. Okay. It's weird. Hang on a second. Bear with me, guys. I don't know what's going on with my... I guess I got to open over here. Okay. Okay. One of my other machines is being a little crazy with its connection. I bet you that's what's going on. All right. Okay. Where was I? Can you review the difference between short-term, mid-term, and long-term bonds? Brian has a video where he went into a lot of it, I think. I think this is going to be one, instead of me going on it over class, this is probably going to be one that you might want to ask Brian to talk about in either the Broiler Chicken show or Daily Brief or something. That's a little too weighty. I don't think I'll end up having a chance to get to the to the spreadsheet if I go into that. All right. Regarding traditional securities or simply using screeners, and then going by P/E and P/B ratios, shares outstanding, transactions enough. How important is to read the 10Ks? For the most part, this is what I use. Like I'll use my screeners, and then I'll go and I'll look at the PE, I'll look at the PEG, I'll look at the PB ratios and shares outstanding. Basically the stuff, if you go to FinViz, right, and we're looking at a particular asset, the stuff that's in this first financial splash is what I look at for the most part. In addition to this, I might look and see what's the news been on it, and kind of more importantly, what's the insider trading been like on it, right? Am I seeing a lot of sales? Am I seeing a lot of buys? Are they unusual sales and buys? Because you'll have people that just have a regular sell that occurs every quarter or whatever, right? That's just their way of getting paid, right? I'm not really worried about that. What I'm worried about is unusual volume sells and orders on the insider trades. So for the most part, I do that. I'm not saying it's not important to read 10Ks and get in those. That information is really valuable. But what I'll do is if I have something that I'm interested in and this information doesn't give me a clear signal, that's when I'll dive into and read the individual financials for the company and start taking a look closer at it. Okay. It's worth the effort to go the Buffett approach. Well, what Buffett does is not trade, what I would call trading. It's investing, right? The time horizon is much longer, so it's not, that is valuable and that's important, but that's important when your time horizon is 20, 30 years, right? Is this a well-run company? And even then, you have to keep an eye on what's continuing to go on with that company, because changes in leadership and all that can affect that quite a bit. But I'm a Warren Buffett fan. I like Warren Buffett, but what he's doing is not what I would call trading. Okay. So in terms of trading, which is what we're talking about really in this class, is I pretty much look through these first transactions. If I don't get a clear signal, but I'm still interested in the company, then I might dig into the detailed information to see if there's some indication of something coming up soon that's going to cause a price pivot. All right, going back to week 3, I would like to understand this a bit better from the lecture. From a bearish perspective, we can only look back at the Nortel example. Mr. Roth had a large Canadian bank write him a put option on his shareholdings at a 10% discount to the then market price. Essentially, he sold his entire position, just one transaction. I understand options being insurance. So options get pretty complicated pretty quick. For the most part, most of the time when people are using options, they are using them as insurance. Options, though, are used for a lot more than just that. I'm going to kind of leave it with that because that, like I said, we spend like half of level 3 just going over options, and even then we kind of hit the top 20% important stuff, right? Um, so options is extremely complicated. um, you can use it as an investment vehicle. You can use it in lieu of stock, but all of this entails a lot of complexity. So, all right. A couple of questions. I currently trade crypto from the U.S. via Binance and Bittrex, and some Hotbit or Hitbot. I don't know. I'm wondering if you can recommend a way and an exchange that allows us taking a trade, having a stop loss, as well as a profit-taking auto trigger. There are very few U.S. available exchanges that have conditional orders. My understanding is that Binance is looking to include that in the near future, but I don't really actively trade on Binance. Anymore in the last couple months, almost all my trading's happening on Poloniex. It also does not have conditional orders, but I use a third-party tool called AutoView, which is a plugin for Chrome that detects when an alert happens and then fires off an order. A lot of people on the site like 3 Commas, which does a similar thing. For the most part, you kind of need a third-party tool. Coinigy itself allows for some conditional ordering on exchanges that don't allow them innately. The problem with using third-party tools, the risk you have, and you need to understand and accept this risk, is that if I'm running AutoView runs locally on my machine. If my machine goes down, or if there's a power outage, or if I lose internet connection, those orders will not fire. Now, I've got some ways that I handle that risk. I actually run those on a virtually hosted machine on my Amazon AWS service. So, but even that could theoretically go down, right? Similarly with 3 Commas or Coinigy, if their site has problems processing the order, that can cause some issues. So there is an additional risk with having a third-party tool that executes your trades. But for me personally, that risk is worth the ability to just set up my orders and not have to monitor things. There are still pretty much one exchange I can think of. Now it is a forwards exchange, which means you're not buying the underlying asset, you are trading contracts on it for Bitcoin. But Deribit allows conditional orders to be put in, so you can have your stop and your take profit available in there. But there's a limited number of assets that you can trade on Deribit. Like Ethereum, I think Litecoin and Bitcoin is pretty much it. All right. So the other thing that I do, so when I'm trading on, before I figured out AutoView and got all that set up, when I was trading on Poloniex or Bittrex, what I would do, since I only could have a stop, I couldn't have a stop and a take profit, I would just do a trailing stop. So what I would do is I get in on my trade, I'd set an alert in TradingView to tell me when we hit my take profit target, and then what I would do is, now I trade on a 4-hour time frame, and this is part of the reason why. I would set it up so that every 4 hours when the candle finished, I would look and see, have we established new highs. So what I would do is I would trade back to the third high. So if I was in a trade, and say I got in a trade down here, okay? Just as an example, what I would do is I would keep track of the lows as they came in. I'd look for the next higher low, and then the next higher low. And then when I got to this point, once this low confirmed, then I would move my stop to this point. And then when we got another higher low here, then I would move my stop to this point, right? Now, what this means is that I'm not going to capture all of the profit all the time. And so I'd have this alert set like my take profit. And if that triggered, then I'd go and I'd manually sell my position. but I would keep moving my stop up until then, and that way, if the price moved against me in the midst of the day while I'm working, um, or otherwise not at my computer, look at it, I would at least capture some of the profits of the move, right? It's not ideal, but but it's something. Ah, okay, David. Yeah, I meant more how to select the sell at price, the stop loss, whether it's market limit or other choice, how to understand the units. Um, yeah, so generally speaking, most sites allow you to do what's called a stop loss. And when you have a stop loss, you have two different ways of doing that. Most sites are going to have stop limits specifically, and that means when price hits your trigger, it initiates a sell order at another price. And if you're wondering how to set that, what I will typically do is, um, and this is an art, not a science here. I will look at the average movement on the period I'm working with. So, like I said, most of the time I trade on a 4-hour period, right? So what I'll do is I will look at what is the typical movement range that I'll see. What's my average range of candle? And what I'll do is I'll look for that and I'll say, okay, so this looks to be kind of the longest candle that I've seen. So I might, if I know where I want my price to get me out at, I'll set my trigger at the top of that. So this range is, let me measure it really quick. That didn't give me the thing I needed. Okay, so we are going from here down to here. All right, so 1342, let's call that 1343 minus 1327. What's 43 minus 27? 16. So I would do like a $16 range. So I'd find out where I want my stop to be, add 16 to that, and that's where I set my trigger at. Okay? That way I'm providing the best odds that price is not going to move beyond my sell order when it gets triggered. Yeah, and it's going to vary a lot by exchange, David. So each exchange is going to work a little bit differently, and you're just going to need to get comfortable with it, right? Like what I would do is I would do a few trades when you do it with real money or crypto at a very, very small amount just to understand the mechanism of how it works. Yeah. With some sites, if you're outside of the US or have a way to trade on BitMEX, there's a test net for BitMEX. If you go to testnet.bitmex.com, you can set up an account, and that has the same mechanisms as its live site, but you're playing with fake money, right? So I don't actually have 0.8 Bitcoin in here. This is 0.8 fake Bitcoin in my and I can do a deposit and add random fake money to that, or however I want to do it, right? So I can match it up with like a person's account and then trade on that, right? And that way you can get used to the mechanisms for that site. But a lot of exchanges don't have that. If you're talking about stock, the mechanism is very different between, say, a TD Ameritrade account and an Interactive Brokers account. The interface is very different. So you need to, and E-Trade, same thing, very different. So you need to get used to how each one works. So I don't know if that really answers you, but all right. So let's take a look here. From within USA, if I want to trade down market, where and how can I short? Is it a must to have a margin account when shorting? It is a must that you are going to have a margin account when you're shorting, because that's just how it works. That's how shorting functions. If you're in the U.S. and you're trading crypto, you have very, very few options. right now, and it's because we have this like gray area of legality around it. Um, when it comes to things like CFDs, uh, U.S. residents are not supposed to participate in contracts for difference, which are CFD sites. They are unregulated. With that said, many of sites like that still allow U.S. customers. They just don't validate where they come from, right? Similarly, like Deribit doesn't have any know your customer um, elements to it because where it's based in the Netherlands, they're not required to do that as long as they're not um, transacting in fiat currency. So, um, but the net is that you are very limited on that front. Um, you can. I don't have a margin account set up on my Robinhood, so I don't know if Robinhood will let me short crypto if I have a margin account. I should probably do that just to see. Um, so that might be an option, but I don't really know for sure. Uh, and honestly, for right now, you're in the middle of level one. I don't really recommend getting into margin accounts or doing shorting at this point in time. What I would do is get used to this process in bullish markets first. It's the simplest way to do it, has the least number of extra things you have to consider. Get used to that process first. Really get comfortable with that. And once you're really comfortable with that, then start expanding your portfolio and what you trade. Okay, so for right now, and probably for a good 6 months after you finish level one, I wouldn't really recommend that you move into like a margin account or anything like that. Just trade um, the simplest way possible, right? Because what's really important in the long run is getting this process down, getting used to these indicators, getting used to how do you set your stop loss and your take profit levels. Like how do you identify those? Um, get very used to that part of the process first, because that's going to serve you best in the long run. Once you've done that, then these other elements, as you add them in, um, don't confuse the rest of your trade, right? One more. Are you able to do a tutorial on how to share a trading view idea in the simplest way? Yeah. So uh, it's pretty basic. You just once you have your setup done. So when I share an idea, like I always put like a text box on, and I describe what setup am I using. Then I look at my reasons for a trade. For me, it's location, momentum, and structure. Right. Very often, I'll also put my stop and my take profit levels. Okay. What I'm describing here is how I'm deriving each of these. And then I'll have my drawings on my chart itself, right? I might say like, oh, I don't know. I'll have my fibs on here, and I'll have, let's say I came from here, and I'm just picking an arbitrary spot, guys. This is just me showing you how to do the picture, not so much with setting up a valid trade, right? But let's say price came down into here. We had our RLZ set up. Then I would put my price tool on where I was putting my trade in, right? My stop, right? All of that. And then you come up here and you just hit this button. This is your take a snapshot button. Alt S will do it too. Okay. What you're going to do is going to pop up a URL. You just copy that, and then you can share that. And what the URL looks like is like that. Okay, it's not going to show your cursor, but it will show like all of the text from your price tool, and it'll show all that. That's the best way to share that. Okay. Yeah, Tony, and I don't mind opening a merchant account on Robinhood just to see, but what I want to know is does that margin apply to crypto, right? Like I had a merchant account previously with Robinhood. It works fine for trading regular securities, but I didn't have access to crypto at that time. I've since canceled the margin account, um, but I then got access to crypto on it, so I'm curious to see whether that is going to apply to crypto or not. Now, something to note here, you'll notice there's a commission and fees portion for this for margin. Okay, so bear in mind that Robinhood's big claim is that there's no fees for your transactions, but that doesn't apply to margin. Margin is subject to its own. They do their own way of handling fees and commissions, and so like I said, just adds a layer of complexity. So for right now, just focus on learning the process, and then once you're comfortable with the process, then you can kind of dig into the fee schedules and all of that stuff, and those are going to vary by exchange. Okay. So hopefully that made it clear on how to just share your trade. That's the easiest way to do it. Go review the trading log. I'm trying to get to that, absolutely. Incidentally, if we don't get to something in the trading log and you had put it in there and you're like, I want some feedback on it, there's no problem at all with you just PMing me and saying, hey, can you give me some feedback on this particular trade? Even if it's not in the log, but preferably it's in the log because I want you guys to practice that, right? But you can always PM me and say, hey, can you take a look at this? And I will be happy to either address it with you. And if I do, what I'll probably do is also speak about it in the weekend session. And then, can you explain, list everything that fits into location reasons? No. So there's a lot of things that you learn about for location that aren't part of level 1. For now, with level 1, when we're talking about location, we're talking about our fib retracements. Okay? For the purpose of this class, when we're talking about location, what we're talking about are fib retracements. Either here, there are things like the bot setup, which uses non-fib numbers, but to give you an example there, so the bot retrace is you want price to have retraced more than 33%, but less than 66%. These are not Fibonacci numbers. This is just a particular setup that goes back quite a ways. Brian, I think, learned it from one of those hoary old traders he used to work with. So location for this one has to do with is price in this box, right? Right. For a setup like the 3-step setup, you want your price to be in a previous move's reload zone, right? So previous move up, that's where we'd look at things like, well, like if we were in here and right, for that one, for the 3-step setup, you want to be specifically in that reload zone. So when price came down in here, made some structure, you got some divergence, that would be that setup. That's what we're talking about when we talk about location. We're talking about, are you in a reload zone? If it's a trending setup, are you in the zone for that setup? So if it's a bot, are you over 33% and less than 66%? Yeah, and Brian makes another point here too. Margin lending rates are not the same as commissions and fees. Also very true. And again, it just reiterates what I'm saying here, which is there are layers of complexity involved with margin trading that I don't want you guys to get distracted by. All right, so so I won't tell you everything that I use for location because I use more than just reload zones and retracements for locations. There are things like with Gann studies that you'll learn in level 2, moving averages, moving average crosses, and some specific elements of that. Some trend line breaks. These are all other location reasons. But for you guys, for level 1, the only location reason we're really going to teach you is using reload zones off of fib retracements. Okay. Is one of the biggest ways a trade can fail for a loss is getting stopped out or whales trying to stop us out. I'm not sure why you differentiate the two. Most price movement is driven by whales or the broader market. Like whales or I said broader market, that's not what I meant. By whales or by institutional investors. Most of the time when we get stopped out, it's because they wanted to push price to where they would stop out as many people as possible. So, yeah. I'm not sure why you would differentiate getting stopped out versus whales stopping us out. It's getting stopped out either way. All right. Okay. So I think that's it for the list of questions. Did I miss anything in chat? Since I've had to go back and forth. Let me take a look here. Oh, I like that, Brian. So this is what vetting a setup looks like for Brian, as he says. He's taking notes. He's vetting this DI model, right? And so he's, showing different trades, how they resulted, what the details were of all of this. This is what it looks like for him. For me, I track everything in my log. I think I closed the log. Let me open it again. So for me, I track everything in my log. I've got a section in here. So I'm going to open up some sections in the log today. You'll see some other stuff in here. But I'll show you how I go about my how I go about my paper trading in there after I look through these. So let me look through a few of these. All right. Let's take a look. Okay. And you probably know this now that we at the end of class here. But the volume impetus study that's correct here is the yellow one, right? Because we have the movements between each of them. Yep. And you can see how it kind of followed along with OBV itself. This is something Brian mentioned earlier, right? Yep. All right, that looks good. And I like this too. You'll notice how we've got this W and it's crossing the EMA line, right? So that's a pretty strong signal here. I don't know what price was doing during this. I don't know if it's moving up or down. I'm assuming it's moving up because we are looking for bullish movement. Yeah, so we'll see. I don't have the price to correspond with it, but in terms of the three lower highs, the yellow is the correct one. Okay. All right, what do we say here? Tried drawing long and short positions. Short seems okay, long not so much, but tried it. Advisement, note, when I do time frame of daily, weekly, monthly, the long holds better, but when I switch to the 4 hour, it no longer holds across. Bad signal. Previous move there. What is this? This is a daily. Yeah, this one's kind of tough, right? So we had our previous move up, but we didn't even blink when we hit that reload zone, right? We just shot past it. Bearish reload zone. This is pretty good, right? So this big bearish reload zone, and we just spiked into it. We didn't really get structure on the daily, but I'd be curious to see if you looked on like a 4-hour or hourly, did you get an M that came in here that you could have gotten short on? Yeah, overall pretty messy. I don't see a lot that would have gotten me on a trade on this one. But your reload zones are drawn well. I like that. All right. Would this W inside the RLZ have been a solid reload? Let's take a look. Well, bear in mind, this wasn't a reload zone at the time that the W came in here, right? Because we have the range from down here to up here, and that's what gave us the reload zone. So at the time this came in, this wouldn't have been in a reload zone, right? If price then came down and came into here and gave us a W down here, that would be pretty solid. Now, I don't know about looking to the left, right? This is GBTC, I think. Looking left, this might have been a reload zone from a previous move up, but we don't really know at this point, right? All right. Let's see. I'm just catching up to chat here. Yeah, Tony, you don't have to get a divorce because you're reading 10Ks all the time. That's funny. Dave's chart. Let me go back to that really quick. Looks like a W there instead of an M to me. Right here, yeah, this is a W here, but don't really have location, right? The only part of this trade really where we got structure in location was maybe up here if we looked on a lower time frame. If we got an M up here, that might have been worthwhile. And now we've got OBV, right? So moving forward, you'll be able to look and see what did OBV look like during that time frame. May to September, huh? Okay, let me take a look. May to September. Oh, here? This guy? Yeah. It's kind of hard to tell, right? It looks like, I can't tell, I don't know if this line is straight or if that's angled a bit, where he says neck there. I would think of this as a W if it had broken above this level here. But it doesn't look like it did. So really, I mean, so I would draw this left-hand smiley face. I would actually put that up here, right? Yeah, I can't tell. Either way, it's pretty dang close, right? So really more of an M than a W. I mean, I know we have this W in here, but given we're in the midst of this overall M, yeah, I don't like it too much. Yeah, no worries, man. Absolutely. This is good stuff. We can move on to the next one. All right. I think I looked at this. Let me just bring it up again. Oh, yeah, this is the one where we weren't really in a reload zone when the W occurred. Well, at least not in the reload zone that we can see on the chart. All right. Volume impetus, second candle, highs, help. Bulls or bears in control based on volume. Correct volume divergence. All right. Yeah. I mean, it kind of looks like both camps are really noisy here. They both kind of settled down a bit. I don't know that either one's really fallen asleep. If this candle finished down here, I would say this low, because we had this, these all look to be about the same. I would say if this closed down here, that would have been the bulls falling asleep on there. But we don't have an M in OBV. So what I'd really want to see is an M in OBV that crosses this moving average first, and then I would look and see, do we have volume impetus. I generally don't look at volume impetus first. I only look at it as confirmation and secondary confirmation of my OBV signal. So what I'm really looking for most of the time is OBV divergence, and so I'm looking for like an M in OBV in this case because we were going up, or W in OBV. I look for that whatever signal it is to cross the EMA, and then if I have that, that's the point at which I generally will look at volume impetus. That order of operations makes sense? My first major tries on identifying possible trade entries. Freaking up. Hey man, mistakes are great. Hot messes are good. Because, you know, it's the stuff where we get confused or it didn't fire. Those are the ones where we stand to learn the most, right? All right, what do we got here? Wait, did I just skip a bunch of stuff? I think I did. Hold on. I was up here. There we go. All right, correct numbers, bulls falling asleep. This certainly looks like the bull's falling asleep. And yeah, you have these marked in the right spot. Yeah, absolutely. Absolutely. Now, like I was just saying, this would be the third thing I look for. If you saw this after you saw an M in OBV that was crossing the EMA, preferably while price was still going up, yeah, this should be gold right here. Yeah, good job on that. All right, bears fall asleep, lower highs. Bulls also how to interpret this. Okay, let's take a look. All right. I don't so much like this for the bears falling asleep. This seems to be part of one move because these are all just bearish bars next to each other. What I'd want to see is like 1, 2, that becomes 2, 3 down here, really here, right? So any break below this third one, any close below that would have been falling asleep, but they wake right back up here. So I feel like they were starting to fall asleep, and then they got the shock in there. Now you look at this, we got high, lower high, lower high, right? If we get a bearish volume bar confirmed below here, they are night night, but probably so is bull volume, right? Did the volume div make sense on KO? Come back to it. It not really. So we have higher lows here, right? What we really want is lower lows over here. So like the drawing makes sense, but we didn't see that in price and OBV, right? So I don't. So maybe it made sense, right? And really, and this is, let me just correct something really quick. When we look for bullish volume change, we look at lows. So lower lows, higher lows on the indicator. Really, these are backwards. What we want to track is higher highs on price and lower highs on the indicator. I just said lows earlier. That was not correct. Higher highs on price, lower highs on the indicator. Because again, it's about that pressure, right? Price was coming up, and we start seeing pressure on the indicator moving, pushing it down, Okay, if we were looking for bullish divergence, price had been going down, and we need to see pressure pushing it back up on the indicator, right? Does that make sense? All right, now we come down here. Bullish divergence. Let me look here. No, not really. So I think what you're looking at here, I think what I'm seeing here is the VIMP script. So I'm just seeing the lines of the bars. That's not what we look for divergence on. We're going to look for divergence on the OBV indicator itself. So this line, or the line that I think is the orange line in here, or yellow line in here. And for bullish divergence, we look at lower lows. So you have this drawn off the highs, but we want lower lows, and we want higher lows on that OBV for divergence. That can be pretty confusing. That was one of the early things that I got wrong when I was going through level 1, was understanding that for divergence, when your price has been coming down, you want it to move up, you need higher lows in the indicator and lower lows in price, right? Knowing which side to look at, highs versus lows, made a big difference in my trading. All right. Bulls in control. I'm pretty sure I drew my fib retracement wrong again. Let's take a look. All right. So price came from here to here. No, the fib retracement's good. Fib retracement's good. So what we're looking for is we want it to come down into a reload zone down here for us to get in on it. Okay. Now, if you were looking for a bearish move, what you would have drawn is from here down to here, and I bet you dollars to donuts, this is actually a bearish reload zone up here, right? Which means it's an ideal place for price to start coming down, and then we look for a buy-in down here. Now, it's the other thing we're looking at in here. We're looking for bulls in control. Yeah, I would say the bulls are in control right now for sure. But I wouldn't be surprised if pretty soon that started rolling over based on this movement. Now, I don't know. If we looked left, I don't know if that's off of like a much larger thing, and maybe the reload zone's actually up here. But, yep. Hang on, I need to take a drink of water. My throat's getting a little parched. I'm going to go over just a little bit. I got started a little late, but also I want to get through all of these if I can. Okay, where was I? All right. Starting from correct volume bar. Volume diff correct. WB structure fail. Let's see. Now, here's a good example of divergence, but now you drew this before I corrected this earlier, right? But what we want to look at is the fact we have higher highs, and across that same time frame we have lower highs on the indicator. That's the divergence right there and right there. Okay. Did we get an M? I think the M finally confirmed down on this guy here. And then we kind of look back at the last few. 1, 2. Yeah, the bulls falling asleep thesis looks good. Yeah, that looks pretty good. From purely the volume study, this looks pretty bearish, right? We've got the divergence here. We've got volume confirmation. We've got an M confirmed. I think it's confirmed here. I could be wrong. If that is not lower than this, then this is not yet confirmed, and we're looking for a close OBV below that level, right? Without the bulls waking up again. But, obviously this is just one part of our study. We would also want to see where are we at in location on Berkshire Hathaway, and then even if we had good location and this confirmed up, we'd still want to wait for some kind of structure to get us in on a short. Okay. Okay. Make sure I'm caught up. Okay, cool. Sorry, I have to keep flipping back and forth. I normally have another screen I can have my chat up on. All right. Where are we at? First, we go back in volume study. Yeah, we talked a bit about this. I just worked my way backwards on charts. So once I have the divergence and I have the structure and I've crossed the EMA, then I'll go backwards on my so like this was bullish, it looks like. Yeah, so I'm going to go back. I'm going to say, okay, here's a high. This is probably another high. This is probably another high. So boom, boom, boom. But then we got a higher high here. So then we go here to here. Yeah, so you can probably go boom, boom, boom. Yeah. I mean, a monthly trade is, you're talking about extending patience pretty far, right? So it's pretty common to see whatever time frame you're on, it's not unusual for it to take 60 periods for a trade to finish, right? So I did a study of my past trades, and it's pretty common. It's a pretty broad range, but anywhere between 50 and 70 bars, whatever time frame I'm on, is about how long it takes a trade to finish up, right? From when I get in on it for most of my trades. Now that being said, if you're going to go 50 months out, right, you're talking years before that resolves. So is that a valid trade? Maybe. Do you want to get on it? Maybe. Right? Your time horizon's pretty far at that point, right? Okay. Are my fibs and AB equal CD placements correct? Let's take a look. All right, A to B. Well, all right, so let's take a look first at the fib retracements. Is this? I'm confused on what you've drawn here. All right, so we went from here to here. So based on this study, this retracement study, what we're looking at is for price to come back to this area. It looks like you're combining retracements and extensions, which we do not recommend as a general rule, because they're based on kind of two different scales, right? So I don't know. I don't even know what this base is off of. From here to here. Yeah, that's probably not how I would do my extensions. All right, so we had this previous move from here down to here. We got a bearish reload zone, but we just kind of blew right by it. A to B, it kind of feels like you're choosing your B pretty arbitrarily. You probably want more culminations of movement, right? So if I were to do this, it's a daily on Visa. Boy, I'm looking for some good pivots to do your AB off of. You might do AB off of here, and then C to D hopefully takes us about to there, right? Ideally, you want to draw your AB line directly on the range itself. So from the low on the one candle to the high on the other candle. And then you can just copy and paste that, and you drag that to the new low, and that'll project out to the new high. So let me show you. So if I were to do an ABCD, let's say how we're looking at gold. Okay. What I would do is I would go. So this is kind of a established bottom in here, right? We came up, we consolidated, we broke out. So I'd go down here to this high. Let me get rid of my forever bar. This was another pivot where we came back down, right? So then I copy, so Control C, Control, well, that didn't work, weird. Let me just do it this way, we can clone, right? So we take the cloned one, we place the bottom of it at the pivot low here, and that gives us a projected CD up to this level here. Okay, so we would take profits here at this level. Another tool you can use, and I do like it a lot, it makes this whole thing a lot easier, is do this trib-based fib extension. Okay, and what you do is you draw off the first one, and then you come down to the base of the pivot, and it will project for you. Now, it doesn't project in like time for you. It just projects vertical distance of price. So the other one gets you the advantage of being projected in distance as well, right? But what this will do is you look at 100% on it, and that just makes it really easy and quick to be like, okay, well, how far do I think this is going to go if it goes? Boom, there's 100%. Now I have mine set up with these specific 25%, 50%, 66% levels because I use that for my stop management. But you set these levels to whatever you want, but the 100% gives you the ABCD price extension. Okay. Cool. Thanks, Tony. I'll hit that in just a second here. All right. RDs. How's this? Sorry, no volume studies yet. Week behind my track. No worries. No worries at all, man. Or woman. Whichever the case may be. All right. What am I asking here? How's this? No volume study yet. So we're just looking at location. Yeah, that looks good. Gives us the RLZ here. This is, I don't think this is a fractal, but this is what we call a tweezer bottom, where you have these two tails that both ended at about the same spot, pinching a pincher bottom, right? I wouldn't necessarily be opposed to getting into that. It's a pretty ballsy trade, right? If you got in, you would have to wait until this completed. A break of this high would get you in on the trade. You'd have to risk down to here and move it to like a 2-to-1. But yeah, so if this middle bar had gone lower than the other two, I would call this a fractal, right? It is not really an inside bar. Like, I'd want to see the body within the previous body, but it's not bad for a pincher bottom. All right, let me take this look at one that Tony shared. This one was skipped. More volume impetus, no low between candle bars 2 and 3. Let me take a look. Yeah, we doing bearish or bullish? If we're doing bearish, 1, 2. Yeah, it's a little iffy. It is lower than the previous one, and there is space between it, right? So even though most of our volume, one thing to consider, even though most of our volume is bullish in these, some of it was probably bearish, right? So we kind of had a low between. I think I'd count that. 1, 2, 3. Yeah, that seems valid to me. Oh, are they separate on there? It was just a little confusing me. Here's my problem with that one, CJ. Let me talk a little bit more about it. My problem here is the main thing is the ABCD. Like I would draw it, like how you draw it matters a little bit because I can't really tell. I mean, AB, I can't really tell what you're doing the C off of, right? Because you do AB up to here. Is the C off of this level? If so, then that's fine, right? That's okay. Just a little unclear because of how they're to the right. Here it's kind of screwing me up. And I don't know, did this complete before you establish this another ABCD leg going up? If so, that's fine. I don't really like this extension level, right? Because you're going this whole range here and then projecting an extension to 200% off of it. I need to see a little more to the left. This is daily. Maybe on a weekly we see like a head and shoulders that came in here, and if so, then that'd be okay. But I think we're asking a lot of this to go up to 200%. You know, I mean, we look at this move here. It's been relatively flat, right? To get to 200% by January, February, maybe. But I don't really like the fib extensions for that. I think that's just, if you did a fib extension off of one of the AB moves, I'd feel better about it because that's basically what we're doing when we do an ABCD. We're doing an extension off of it, but an extension off this whole thing. We're basically saying this is AB, and then we're gonna CD off this same level, and that just seems a little much. Okay, does that make sense? What I'm saying there? It's not that it's terrible. I'm having trouble reading it a little bit, right? If this, so what sounds like what you're saying is this was from here to here, and then the CD was C to D here? And if the D was here, and that then became the new AB, then the C here doesn't make a lot of sense, right? And this is why I tried to draw them on the bars themselves because it's hard to see otherwise. You can make these pretty thin, and then they don't obscure the bars too much, but just having a little. I think this last extension, this last CD, is a little wonky. This one looks like it's probably okay. This AB to CD here, but this one here kind of seems like this. You're putting this low before this one is finished, right? Because I think that finished like here, right? Here, but it looks like this low is off of this one, so. And we will sometimes see like A, B, C, D, and then another A, B, C, D, and then another A, B, C, D. That happens. I think this one was started kind of prematurely off of this AB. Right? If this CD became an AB, I think this would be a CD then, was just started prematurely. Because I think the other one finished about here. All right. Okay, guys. I think that's about all I have the wherewithal to do right now. Let me mark this. But really good stuff, really good questions. I like that a lot. Oh, one last thing. So for this next week, let's try including the three things. So we're going to have a sort of, we're going to call this setup the level 1 special. Okay. What we're looking for location, we want fib retracement reload zone. we want, for momentum, we want OBV divergence with EMA cross and volume impetus. And then structure, we want price structure, okay? This is what we're going to look for. This is our first kind of official setup, okay? What I want you to do is hunt for this. Look for any assets that are in a reload zone. Look for divergence on OBV with an EMA cross and volume impetus. So we have to confirm that divergence with a W or an M, right? And then we look for price structure following that OBV divergence. So price structure can be a W, can be an M, can be an inside bar or outside bar reversal. And then mark where you would take your put your stop and take your profits. So we're gonna, and so let's do, let me put this in here. So profit at 2 to 1. So stop at low of price structure. I'll say low high, right? And what I mean by low high is if it's bearish, it's going to be the high of your price structure. If it's bullish, it's going to be the low of your price structure, right? That's going to be the part where you put your stop. And then we want to set your profit at 2 to 1. Let's try doing that in the next week's charts. Okay. Let me put this on here. For next week, hunt for the following. Copy that. Okay. Make sense what I'm asking for, guys? Looking for price in a reload zone, OBV divergence with an EMA cross and volume impetus, and some kind of price structure. We're going to set our stop at the low of whatever the price structure is, or the high. It'll probably be a low, because that's going to be easiest for you to hunt as a long position. And then we're going to take profit at a 2 to 1. Yeah, CJ, don't get me wrong. When I'm giving you feedback on it, I hope I didn't come across like harshly or anything. It looks really good. The failing that we're having here is me, not you. I'm just a little unclear on what exactly I'm looking at. This ABCD looks good. Your reload zone looks good. You know, obviously that reload zone is going to move up as price moves up. This reload zone looks great. So do you? Oh, you do have a question here I didn't answer. Do you only use the 38.2 2-hour confirmation on a daily time frame? No, not at all. I'll use that 2-hour confirmation on whatever time frame I'm looking at trading on. So for me, usually that's actually a 4-hour time frame. So when we break above that on a 4-hour, now I hunt a lot of bots, so I'll continue hunting a continuation all the way up to like 66%. But that's just because of the bot rules and how they work. But as far as the 2-hour confirmation for 38.2, whatever time frame I'm hunting on, that's what I'll use. 4-hour. If I'm doing a 30-minute chart, I'll look in a 30-minute. Yeah. So overall, it looks good. Don't take that the wrong way. Don't take it badly. Yeah, that could be it. Tony makes a good point that if the scale were auto scale, it might have been easier to see. So. But yeah, please don't have the takeaway be you did badly. That looks good. I just am a little unclear on parts of it. So, all right, guys. So, so what I'd like to do this next week is start hunting this setup here. Okay. I put it in the Q&A, so you'll have access to it. And that's what I'd like to see you guys try to find and put into the Q&A log or the trading log. Okay. let's get you started looking for this, because ultimately what we're going to do is we're going to expand this out. This is going to be the setup, like the chief setup you walk away with in the future. It's essentially our 3-step setup. We're going to add Willie, we're going to add MACD to it, yeah, and we're going to add some targeting to it, which I'll show you later too. But for now, just look for a 2-to-1, stop at the high or low of the price structure, and look for these elements, okay? All right, guys. All right. With that said, you're doing great work, guys. I love the level of interaction that we're getting here. This is fantastic. If anybody has any questions that haven't been answered that you need answered, please PM me. All right, feel free. You have primary access to me during this course, so by all means, please message me if you have any questions, or if I didn't hit a chart that you put in. As you can see, I am human and fallible. I will occasionally miss questions. It's not intentional. Just call them out, and I'll be happy to detail them for you. With that said, have a great week. As Brian says, play from a position of strength, and bye for now.